This is your dose of daily market wisdom with Master Trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with Master Trader Nick Santiago. I'm Kerry Lutz. Today's 4/18/22, show number 383. So what do we got, Nick?
Well, we got a lot going on out here, Kerry. You got bond yields are really the talk of the town. Earlier today, we had bond yields spiking at 2.86% on the 10-year. Everybody's talking about that. You got commodity prices flying, Natgas. I mean, we are looking at a lot of movement and activity going on in a lot of different spaces today.
Well, we had talked about for years now, at least a year and a half, you've been calling for higher yields, and here we are. They're here.
Yes, here we are. And, while everybody's panicking about higher rates, it's not usually terrible until they go to a point where they've crossed the Rubicon. I don't think we're there yet. One thing I have noticed, though, this late last week, even going into today, is that the yield curve has steepened. And as long as the yield curve steepens, that can sometimes help markets out a little bit, especially the bank stocks. Banks have really looked horrible on the charts lately. Today, the financials are upticking a little bit. So that's probably due to the steepening of the yield curve. But if that yield curve starts to invert with rates up here, the 10-year now hitting 2.86% today, that will be a big problem, and a recession would be around the corner. But we're not there yet. And with yields, with the steepening of the yield curve, I think that's a little bit of a positive right now, especially for financials.
All right. So we'd be remiss if we didn't discuss Natgas. You know, you and I picked up on that trend almost immediately from when it started going up from the high $2 range, then into the threes. Then we saw it hit $6.50, $6.59, like 6 months ago, pulled back, consolidated, did what all commodities have been doing over the past year or so.
That's right. They had a really good consolidation pullback in February, and now they're off to the races. I mean, yields are overbought. They're extended at this stage of the game, but they're at 773. They're up another 6% today. I mean, even though they're overbought, as long as this Russian-Ukraine war continues, I have to think that all commodities are going to remain elevated. I can't see them really going down much. And Russia is such a big supplier of natural gas to Europe. It's just, I have a hard time seeing it going down very much. Now, you're going to get big sell-off days and pullbacks from every overbought condition, as you know. But I have to say commodities are holding up very, very well, and Natgas is the leader of the pack right now.
And it could conceivably down the road hit $15, huh?
Well, what's to say something can't go higher when, it breaks out, especially when you have a commodity like this. So, I mean, right now, you're at, you haven't seen this level hit since 2008. But just so everybody remembers, back in 2008, Natgas hit a high of 960. And, you can't rule anything out. If you want to look at when it got to $15.87, that goes back to 2005. So, right now, I'd say the next the big level to reach would probably be somewhere around that $9 area. Then you'll go up to 13, which was also the pivot in 2008. And then, then it could be 15 and change. But when something's in an uptrend, don't ever think it can't get up there. It can.
Okay. And speaking of the Ukraine war, it's official now. The most dangerous job in the world is being a Russian general in Ukraine.
Well, I haven't heard that one, but I would think it is probably pretty dangerous anyway. It's just amazing that this war is still going on, which I don't like. I think the longer it goes on, the more problematic it is for the world. So, again, I'd love to see this thing end tomorrow, but I'm not certain that that's going to happen anytime soon.
It's got to take its course. But, previously, the most dangerous job was being a convenience store clerk in New York City after dark. But that's all changed now.
Well, I think it still could be pretty dangerous to be a convenience store clerk in New York City after dark.
Yeah, well, especially now, but things have gotten even worse here for the Russians. So it would appear, I mean, like we agree, you can't believe anything that anyone is saying here, but certainly it hasn't gone the Russians' way. They even admitted that that ship got sunk, their flagship naval vessel in the Black Sea.
Yeah, I think they're having a tougher time than they thought they would have, but I don't think it's anything like the media is portraying. In fact, I can't remember the colonel's name that I saw on television just yesterday, who said that the media is fabricating 90% of what's being told to us, and that's not hard to believe. I don't think anybody should discount what he said there. I think he's right on the money with that.
Oh, that's absolutely true. But on the other hand, the war continues on. Every day it continues on. It makes it more difficult for Russia, I think, because they were expecting to just plow in there, take the place over, put in their new regime, and call it a day. It hasn't quite worked out that way.
No, it hasn't. And I don't think anybody thought that it would happen that way if Ukraine decided to stand up and fight. But you have other NATO countries coming in, sending in fighters there. You have so much, I have to say, disinformation too. So we really don't know what is happening there. But I have to tell you, when I look at wars, and I've looked at a lot of history in my life being a trader, and especially looking at markets, first thing when you go into a country, though, is you knock out their airfields, you knock out their communication networks. This war, they haven't done that. I still don't understand why they haven't done that if they really wanted to take over the country. So if you don't want to take over the country, you leave everything like that, all that infrastructure intact. But I have a hard time seeing, that Russia is really looking to take over Ukraine. I think there's more to this story. But, honestly, we'll only get fed what we get fed from the media.
Yeah, what we get spoon-fed from them. But initially, supposedly Russia did take over the airport in Kyiv, but then they kind of just stayed there and they got picked off and then they retreated, so it would appear. But like you say, we don't really know what's going on. But what we do know is going on is that, the markets really got beaten up last week.
Markets got hammered last week. And, going into an options expiration for the month of April, normally we're going to see a bit more chop. But we saw a pretty good sell-off last week. And, whether it has to do with the recent rally that you had in the month of March staged an enormous rally. And this is, just too many people bought too many call options at that point in time, the near term expiration. Perhaps that was it. But markets definitely took it on the chin last week.
Hey, so what about Twitter? What's your take on what's happening there?
Well, the Twitter story just continues to grow by the minute. So Elon Musk did not take a board seat. Then he said he made a bid for the company. And then today I'm seeing Thomas Bravo coming in, saying that they may make a bid for the company. Now, when I see a stock like this, I kind of do nothing with it. I leave it alone. Prior to this, I was very, very interested in it. I still think the chart is pretty good at the moment. So, there's still a potential upside, especially if some bidders come in. But I don't think this could be bid higher than any more than $58. I did some work on it over the weekend, and 58 is the maximum I think this stock could trade up to. I don't see it getting anywhere past that. And as we speak, it's at, $46.83 at the moment.
It's quite a chart, that gap up there in
it's incredible.
Yeah.
It's absolutely incredible. I mean, I thought the Elon Musk news was very, very positive because, let's face it, Twitter has become a place of censorship, and everybody knows it. I use it less and less. Most people I know don't even really want to use it, but it's still a means to get the word out. So they do use it, but, it could be such a remarkable and spectacular place. But, it really isn't at this point in time.
Yeah, well, we know why, and it's an interesting tale, but we're not going to talk about it here. Just keep an eye on it. And of course, we got earnings season underway. And what's your take?
Well, earnings season is really starting this week. We're going to get, I think you get Netflix and IBM tomorrow. Then next week, we start to get all of the mega cap tech names. So we'll see what happens here. But I think with the big companies, once they start reporting, I think you got to buckle up. Things could get real bumpy out here. Obviously, this is a turbulent market anyway. This is the way 2022 is going to be. So be careful if you're trading something into an earnings announcement. Just understand these stocks can get demolished, and they also sometimes can reward you. I do not like to trade earnings personally. I think it's just gambling, as I can't tell you how the market's going to react to any report, nor do I know what these companies are even going to say.
All right. One thing we haven't talked about in a while, but it's been pretty strong, is the housing stocks.
Well, the housing stocks actually have the housing stocks themselves have been ugly. They've been really, really poor. If you take a look at Toll Brothers, this topped out in December. It's basically topped out at around $75, now trading at around 45 and change. Lennar, which I believe is, probably one of the top housing stocks to follow. This also topped out in December, was trading around $117 a share, now trading down around $76. They are oversold here, but the recent rise in interest rates has certainly hurt the housing stocks. And again, if anybody wants to track the entire group, you could use the ITB, that's the iShares Home Construction ETF, and it's a very good way of tracking all of the housing stocks themselves in one ETF. They are all in there, and this is rolled over in a big way too. It's trading north of 80, now trading at around $57 a share. So you got to be careful with housing. I do think it's oversold here, due for a short-term bounce. But not these are not pretty charts in housing right now.
Right. Yeah. What I meant to say is, they've taken a hit, but they're not like you would think. Interest rates, lower demand, they would have taken a bigger hit.
Well, the one thing I've learned about housing stocks is that they don't go, nothing goes down in a straight line. And if you go back and just look at a chart of the ITB, the first thing you'll notice is if you go back to late 2020, that's where the housing market really stalled out and it really put in a sideways base. And that's where we went down. That's the support level that we're sitting at right now. So, housing does have a lot of support at the current level. And I think that's why it's started to, stabilize a touch here over the last week or so.
All right. Well, I guess we'll see what happens. In any event, you should go right over to inthemoneystocks.com. That's Nick's site. See how he's beaten the indices for decades now. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. And of course, your emails are always welcome. Send them to kl@kerrylutz.com. Nick, we will pick up on Wednesday.
Sounds good, Kerry.